last existing moat is true network effects, like real network effects. Why does having company A make it easier, better, or more likely for company B to be also be part of this network? Why does company B's presence make it easier, better, or more likely for company C to be a part of the network? Why is each added node in the network making the network better overall, making the network more compelling, making the network more profitable? That you don't see very often. And whenever we see businesses like that, that's when I get super excited.
Welcome to VC Uncovered, the series where we highlight the next generation of investors who move faster, take bigger risks, and build shoulder to shoulder with founders. I'm your host, Drew Glover, co-founder of Fiat Growth and general partner at Fiat Ventures.
Bukie Adebo Umeano.
Yes.
So good to have you. We are on, I don't even know what episode this is of VC Uncovered, but you were one of the first folks that I spoke to when we were getting the newsletter off the ground, and it was such a pleasure. Learned so much about you. We've been on cap tables together. We've spent many of hours over lunches, over chats at different conferences, just one-on-one talking about how we think about fintech, how we think about investing, how we think about this new founder DNA. And so, Bukie, so thankful to have you on. If you don't mind, maybe just starting off telling us a little bit more about you, about what you're investing in and what you're focused on right now.
Yeah, absolutely. So my name is Bukie, early stage investor at Anthemis. I've been with the firm now for about 4 years. At Anthemis, we focus on primarily early stage investing. So the fund that I sit on, our early stage fund, we invest in pre-seed and seed stage companies. We have a goal of co-leading and leading those early rounds. The companies that we invest in fit into this broader bucket of high assurance. By high assurance, we're referring to industries that are highly regulated, and we see them as like critical infrastructure for people's day-to-day lives. The core of this is financial services. That's our bread and butter. We've been investing in financial services as a firm for the last 15 years. Over time, we realized our experience in one really complicated regulated industry mapped over to other industries like healthcare, energy, et cetera. And so that broader bucket is what we call high assurance. And we come in at the very earliest stages, and part of how we partner with our founders is by connecting them to our corporate network for like commercial relationships, partnerships, and more. And we invest across the US and Europe.
Fantastic. And I want to kick this conversation off. I know we have a couple questions that I shared over, but I want to kick things off because I have something that I'm really obsessed with right now, which is just like, I'm trying to uncover the last existing moats that exist for businesses. One of the biggest moats that exists was this technological moat. Every founder needed this technical co-founder. Anyone can go do a hackathon and create anybody's product that's already been created today. But I'm thinking about like data. I'm thinking about distribution. There's a number of like things that still exist that, if done right, can be these unfair advantages that are very much like set you up to be really successful as a business, as a founder. I'm curious, as a VC today, like what do you think the last existing moats are that you get really excited about when you're talking to an early stage business?
So I think moats are really difficult to come by these days, honestly. I almost like feel bad for founders having to pitch their businesses in this day and age and convince people that it's like truly unique and nobody else can build it, because I think that's really, really difficult to come by. I think the last existing moat is true network effects, like real network effects. I think people throw that term around pretty lightly. They're like, oh, I'll do this and it'll just create all these amazing network effects. And then boom, my business will be massive. And it's like, well, why does having company A make it easier, better, or more likely for company B to be also be part of this network? Why does company B's presence make it easier, better, or more likely for company C to be a part of the network? And then so forth and so on. Why is each added node in the network making the network better overall, making the network more compelling, making the network more profitable? That you don't see very often. And whenever we see businesses like that, that's when I get super excited. So it's more than just saying, oh, like the more people we have on board, the more data we have. I think that's insufficient now. Right? Because everyone is capturing data at much faster paces and much larger quantities. But that's not the same as saying that you're taking the information that you're gleaning from a couple of these businesses and turning it into something that's effective for the entire network. That's, to me, the last remaining real moat.
Interesting. And so, that very much excites me. As a growth marketer, that's something that I'm constantly trying to manufacture for just about every single client we have on the Fiat Growth side. Also, a lot of the founders that we're working with through our consultancy on the venture side. also something really, really hard to underwrite unless you already see like the magic fully formed. So I'm like, is this a founder thing? Is it a business model thing? Like, how are you evaluating either that already existing in a business or the potential of it existing because of the company that's being built?
Yeah, I mean, part of it is the founder. I like to say that the most compelling founders are the ones that can convince people to do irrational things. Like that is the quality that you're looking for in a founder is that you can
Ding,
convince
ding,
people to
ding.
do things, yeah, that don't make any sense, right?
Yes.
I'm gonna partner with your fledgling business instead of an established enterprise business that I've known for years. I'm gonna leave my well-paying job and go work for your company that might fail in 2 years. And I'm also gonna convince VCs to give me millions of dollars when I have like an idea on a napkin, right? So like that, there is something about the founder that they have this like compelling quality. And by the way, that doesn't have to be packaged as a charismatic founder,
Mm,
right? I don't think the only people who
agreed.
have that quality, yeah, I think that's the misconception is like this has to be this like standing on stage, like beating their chest kind of personality. And I don't agree. Sometimes the people who can convince you are the ones who can sit next to you and be really thoughtful and methodical and calm and measured. It's not my style, but I do think that that's really effective too. So one is the founder. I think the other thing is a little bit more structural. It is the business itself, right? There are some
Mm,
businesses that are designed for stronger network effects than others. I think one is, what do the data loops look like in the business, right? Are there kind of like reinforcing data loops where, one piece of information very closely kind of launches you into the next piece of information? Are you forming a relatively close loop of information that gets stronger and stronger each step of the way? Like there are things about the structure of the business too that can also increase the likelihood of having genuine network effects. The other thing that I look for is where the work is happening, right? So it's really hard to build like a really cohesive, strong network in something that takes someone out of their day-to-day workflow, whether that's an individual user or a business. Like you want to kind of be in the mix of where the work is already taking place in their existing workflows, in their existing patterns, habits, behaviors. That can be a technology, that can be a physical space, that can be a way of working, but you want to fit within the existing workflow because I think then you tend to have a stronger likelihood of ending up in that place. So it's part founder, part business structure.
yeah, and the way you're talking about this, I'm my spidey senses go towards like direct to consumer, the way you're explaining the customer journey. But curious how I mean, obviously, I think from a fintech perspective, we're still in the middle of this like B2B or B2B2C craze. Like the direct to
Mm-hmm.
consumer world is, I think it's starting to bubble up again, but it's by no means in its stride like it was 4 or 5 years ago. Network effects to me, I instantly think direct to consumer. How does that work so much for B2B? What type of network effect gets you really excited from a B2B standpoint?
So I actually think that from like an adoption standpoint, AI is changing the adoption pattern within businesses, right?
Mm,
Businesses of all types, and I think this applies to financial services. So when you're in the midst of a big like technological shift, you tend to get a lot of bottoms up adoption, right? Like an individual is always going to move faster than a company at deciding that we need to use the latest technology,
yeah,
right? Of course, the company has their policy and they have their approach. But what happens is like some developers like, no, I found this thing that's really cool and it's really effective and I'm going to use it. Some like analyst is like, actually, why would I waste my time doing X, Y, and Z when AI can help me go faster? And so I think we're in this mode that yes, that even businesses are looking more consumer-ish in their adoption patterns because you're
that's
getting a lot of
right.
this groundswell coming from individual users who are saying actually the old school way doesn't work. So I think the network effects model applies. Yes, it does look kind of like consumer network effects, but it applies in this scenario because what happens is that when the people in your business start saying, "Hey, this is better, this works," I'm already using it off the side of my desk. Maybe I'm breaking the rules as I do it. I do think that that changes the kind of adoption curve within the organization. So yes, it is a consumer effect,
Yeah,
but in this phase that we're in right now with AI, I think we're seeing a kind of more consumer adoption pattern happening even within businesses.
I think you're right. I really like that point. Two things that pop up for me. One is I feel like right now we're on this like meteoric rise of usage of all these different products. That could be
Hmm.
business, that could be individuals. I feel like we're about to hit this like overabundance of optionality and a lot of like similarities in terms of call it agents and products. And I think pretty quickly, again, this is the way the market always works. Like, right, there's like expanding and contraction. Right now, we're in the expanding phase because there's just so many different products. And I feel like there's going to be a contraction moment where people are like, hold on, like now I got have Claude, I have ChatGPT, I have Lovable, I have Vercel, I have 14 different ways to like build a website. Now I need to figure out how to like bring that back. I also think that from a business's perspective, people will also internally, like our president at Fiat Growth the other day, it's like, I just realized we have 7 different instances of ChatGPT. Like, do we need to be getting on an enterprise plan? Like, do we need to choose between Claude and ChatGPT? The other one is I feel like we're on a race to the bottom of pricing of these things. Every single person that comes out, it's a little bit cheaper. It's a little bit cheaper. And like these B2B businesses, like what used to be an enterprise sell is now, $60 a month. That used to be a 6-figure contract. And so I'm curious. I do agree that a lot of B2B companies are acting as if they are consumers these days, but I also feel like all the things that came from consumer of like lower cost, we're going to test everything. We're also feeling that same piece, which is going to disrupt B2B enterprise SaaS in a big way.
Absolutely. You're even starting to see it with some of the larger AI players, right? Where it's like, yes, they're growing overall, but their net growth is their month over month growth is starting to decline, even for some of the really strong ones. Not like the ChatGPTs and Claudes of the world. I get that. They still have lots of runway, but some of the coding agents, you're seeing that, right?
Big
Because
time.
you've kind of reached the saturation of the types of folks who will actually pay for it. Not the Bukies of the world. Like, I'm non-technical and like I didn't even open up some of these like vibe coding solutions until very recently. So fine, you can still get me, but for the enterprises that will actually pay for it, a lot of them have kind of hit their max already. So I do think you're going to see that a lot. So while the adoption curve has shifted to kind of mirror consumer adoption in businesses, I don't necessarily think that that's good for the business always, but it does tell you something about how you at least get that early traction, right? Because if you don't break, I think now we're still in the phase of the market where if you don't break through that, it's really hard for you to like stick, for you to gain any kind of momentum, right? And again, it's just because the decision-making cycles are so different. Like we've experienced it even internally too, where somebody like will come and be like, oh, I've done some research and I've mapped it out and I found this one. It's like, oh, we already have these other 5 things that we've been using for 3 months. You know what I mean? Like it's really hard to beat the pace of just like, I can find a new solution and like start using it in 2 seconds.
Totally. And it also, in my mind, it actually makes our job a lot harder because the more that happens, what happens is the more we see entrepreneurs trying to solve more and more niche problems. And all of a sudden, what used to be like a niche that was a $50 billion opportunity is now a niche that's $1 billion opportunity, but they're out there selling a dream just like they were as if, they're trying to, go after $1 trillion opportunity. So like lots more really incredible founders are coming to me and I'm constantly asking myself, I was like, is this a lifestyle business or is this a power law investment as a VC? How are you feeling in terms of there's a great talent coming, but in terms of, what they're pitching, you getting caught in the crosshairs of not investing in a business that might be successful, but won't be venture return successful?
So we've been getting stuck there a lot, honestly. Yeah. And I wish I had like a solution to it. I don't. Honestly, right now, we've been trying to approach it with a lot of humility. Like we come in and we're super honest. We're like, hey, here's where we're getting stuck. If you've had a couple meetings with me and it's like the founder's really strong, there's something to the idea, then it's like, okay, I'm just going to tell you like the reason why we're getting stuck or why we're having a hard time. So we just share it. Some founders are, I think that the biggest red flag to me is if you're surprised by that feedback, right? If you're not prepared to navigate, if you haven't thought about it. What we do get, I think the majority of the time, yes, like 60% of the time at least, is like, totally get where you're coming from. We understand that. That is a challenge. Here's how we think about the business potentially moving into other arenas down the road, right? So like that's the kind of thing that we're looking for. But no, we bump up against it a lot. And I actually don't think that we know for sure which spaces are going to not evaporate. The space will still exist where there won't be space for a niche like vertical solution. I think there's still going to be some categories that surprise us. Like everybody was surprised with LexisNexis and like legal seeming to not be competitive overnight. Like we all woke up one morning and it's like, oh, that's gone. That's dramatic. That's I'm oversimplifying, but you know what I mean.
No, I know. I got you.
Yeah. So I do think that there's a lot that we don't know. There's a lot that we can't predict. But I do think we can see which categories are becoming enough of a priority for some of the larger players that we are not going to need a verticalized solution, at least not 15 verticalized solutions in the future.
Of
Right.
course, of course. Yeah, it's a fun one to be investing in, but it's also one where you can make a lot of mistakes fast if you're not. I think to your point, like being like leaning into humility and just having real conversations and just throwing a lot of darts
Yeah.
at every single deal.
And I'll
I
say
want
the
to.
positive,
Go
the
ahead.
fun side of it is that some of the spaces that were historically a little bit less appealing are now a little bit more appealing, right? If you
It's
think of
true.
spaces that touch like physical goods and like the last mile, like that has become a little bit more compelling because you're like, oh, there are pieces of this that are always going to be in the physical world and can't be automated away. What automation do we build around that to kind of get us into the next era? And that's more appealing than it used to be. So,
That's really exciting. I mean, from someone that is also, overseeing this consultancy, a business that historically was always like a 20% margin business, where I can look at it every single day and be like, yo, like, how can we turn this into a 70 to 80% margin business, make it a smaller team, higher output, make it so everyone's 10x and 20x instead of 2x or 3x. Like these are fun problems to solve, but also like low hanging fruit problems to solve. Like
yeah.
literally a chat GPT or Claude instance can turn someone into a 10x employee overnight.
Yeah.
So yeah, it's a lot of fun problems to solve. Definitely. I'm going to transition over a bit, going back to some of the stuff that we originally spoke about in the newsletter. And I think one thing that is makes you such a great investor is this transition that you had from like fintech founder to VC, and you just talking a little bit more about what kind of shaped your VC thesis coming from being a founder and creating something of your own.
Yeah, I think it's shifted over time, but initially it was that I felt like a lot of investors didn't understand the founder mentality and where founders were coming from. I've actually stopped being so cynical on that front. I don't think that's as true anymore. But at the time, I was like, okay, what did I need? What was the type of support that I was looking for in the early days? And I wanted to be the type of investor that I, wish I had, right? So I wanted to be a sounding board. I wanted to kind of be like a support, like a check for people, for founders. I wanted to help like lean in strategically. And so that was the kind of thing that excited me up front. In terms of the actual like industry and places that I wanted to spend time, I think I landed on the fact that of the different industries, I do think financial services is one place where you have amazing innovation and amazing technology paired with the potential to do a lot of like good, right?
Yeah,
Maybe good in like
100%.
the, high impact sense, but even in small ways, even in just making someone's life marginally more efficient, right? Making a business
Agreed.
like, something that used to take 10 hours now takes 30 minutes. Like those little changes that feels so impactful to me. And I was always drawn to the space because of that. And I think the fact that I worked on a fintech business and spent time dealing with some of those problems that influenced one, like the industry that I wanted to go into and then how I wanted to approach things as a founder. I do think being an investor, I've encountered so many incredible investors now that like my view on there is no one out there who cares. Like that's definitely changed. But that's kind of what influenced me early on.
No, I agree. I think I've always been the biggest believer that the fintech space has the highest opportunity of driving like meaningful positive change on the world while
Yeah.
also being able to drive a ton of really incredible revenue. Like doing good
Yeah.
and doing well is a real thing. I'm curious, like the transition from founder to VC, was there anything that beyond like the more like blanketed statement of like, I don't think VCs understood this about founders. But was there something where like when you jumped over to the VC side, there were like these aha moments of like, oh man, like I just got that wrong, about VCs as a founder. Like I get it now.
So many things. So many things. I don't even know where to start. I guess like I like go to markets one, right? Where
Mm,
I didn't understand why the go to market piece was so important early on. I'm like, well, right now the focus should be on like we have this really good idea, we have a really great product, we have people who want to use it in the short term. Shouldn't we focus on like workshopping that? And they're like, no, we want to see the vision for how this scales, right? Like understanding that a lot of businesses do well in the first few years and they reach this
yeah.
point where they can't actually hit escape velocity. And so, of course, investors try to de-risk that up front. Like they ask as many questions as they can to de-risk that part of the journey. And to me, that seems like putting the cart before the horse. I now understand why that's so important, because if you have a portfolio of companies that keep getting it stuck at the same point, you're more conscious of that before you write another check. So that's one. I think understanding how investors, so it's just like part of it was just understanding how investors diligence deals. That was
Yeah,
one. The other
totally.
piece is I didn't understand portfolio construction whatsoever, and how investors think about putting their portfolio together, why a certain ownership stake matters, for example, like those types of things. Like in my job, it was just the investor's job to identify a good company, and that was sufficient. Now, on the other side, I'm like, there are so many great companies that we have not invested in, knowing they were great companies, right? That is insufficient. It also has to make sense for the model. It also has to make sense for the portfolio and all that stuff. So I think that was another piece that I missed. It's a really long list. Those are the first couple that come to mind, but there I did
No,
not have a concept of, yeah.
those are great. Those are great. I mean, we send way more reasons why we can't invest than reasons why we can. Like the ratio is massive. Like, let me just tell
Yes.
you. And so I try very, very hard because, the amount of times I've been a founder in my career, I mean, I think right now it's like fiat growth. And I guess if you include fiat ventures, it's like 6 times. I felt the same way of just like this education of what matters to them, and portfolio construction and ownership are so important. And I tell founders this all the time. I was like, I love you, because they'll tell me like, what's the round looking like? Oh, well, we have $300,000 left. We're raising a $2 million round. I'm like, I'm out. I love
Yeah.
your business, but I'm out. Why?
Yeah.
Because I need 10% ownership. Why? Because the people that invested in me, I made a promise to. And
Yeah.
this was the amount of ownership I was going to get. And so we always have promises that someone above us we've made to them that we have to keep. Biggest believer of the say to do it. If I say I'm going to do something, I'm going to do it, and that's what I expect from you as a founder. And I hope that's what you'd expect from me as a VC. But yeah, it's sobering, the
Yeah.
founder to VC transition.
They say everybody has a boss, right? Like even the person that seems like they have power in a certain dynamic with you, they also have someone that they answer to. Everybody has a
Oh,
boss. Like
the amount of times I tell folks, I'm like, listen, if the government stopped funding Elon Musk businesses, like a lot of shit would go wrong really quickly. Like everyone's got a boss,
yeah.
and so
Yeah.
it's no, it's a good call out. I want to go back to you growing up and you having this really incredible family and these 3 super opinionated sisters that just like taught you in really tough ways, I'm sure, how to have strong opinions, but make sure they're loosely held, and that becoming a superpower of yours. You spoke about this with me on the newsletter, but I think it's so important because we don't get to talk about like our past a lot, how we got here and like these really important pillars that made you who you are today. I'd love to just learn, and you just tell us a little bit more about what those relationships meant to you to get you to where you are today.
I always tell people, like, I think I've known from the time I was a little kid that I'm just like super blessed because of my sisters, right? Like, if anything else, like, if nothing else in life ever went right, I have them, right? So I
Are
have
you the
three sisters.
youngest?
No, I'm number two.
Okay.
So I'm number two of the four, and we're all just super close. Like the first three of us were born within 3 years of each other, and then we had like a bit of an age gap, and then my baby sister was born 7 years later. But they're my best friends. Like we're all super tight. We've been called a cult. We've been called codependent. We got these permanent bracelets put on, so like they're like welded on, they don't come off. And I remember when we got them, we showed my mom, and she's like, "You guys really are a cult." And she literally just like turned her body the other way. Our own mother. She was like, "You don't need a bracelet welded on
Or
your
she
body."
just
But
wanted one. She wanted one.
I know she's probably jealous. But no, I think it's one of my greatest blessings in life, and I think it's great that I've known three of the most impressive people I've ever met since I was a baby, right? And I think what that does for you is it's this idea of like iron sharpens iron. So my sisters encourage me; they're extremely supportive, but they also don't let things slide, right? If I say something that makes no sense, they'll be like, "Wait, back up." Like, where they're like Bukie is like very
It's
slick with the way
important.
she,
It's
yeah, they're
important.
like, back up, that makes no sense. Explain yourself. Like so they challenge me, they push me. I got in a habit of a good like back and forth, a healthy debate from a young age. We're known for that. Stresses some people out to be around all four of us at the same time. But I think that actually has been something has been very valuable for me. It was valuable for me as a consultant. It was valuable for me as a founder in business school, as an investor, being able to kind of hold my own and go back and forth with people, and then also check my own beliefs, right? Like I think one of the biggest like good traits a person can have is being able to recognize when they got something wrong.
Yeah.
Or being willing to say, maybe I'm not saying this the right way. Maybe there's a piece of this that I'm missing. I actually got the feedback I need to stop putting so much qualifying language because I do that so much. But I think having that openness is actually a good thing, right?
Yeah.
Be open to being incorrect. I do think I learned that like at a very, very young age. And so I'm super grateful for that.
That's great. That's great. Yeah. It's so important to not only have those relationships and that that comfort, but also just to have someone that's just going to call you on your shit and like make fun of you and just, but do it in a really fun way. I mean, I grew up playing sports. I still have like teammates that are lifelong friends. Yeah. And my wife tells me, she's like, when you get around these guys, like you just turn into something different. And I'm like, I was like, I know. Cause I have short hair, but I let my hair down and just be me, like unapologetically me. And, having those escapes are so important, but you just learn so much also because it's like these different personalities in this melting pot that you get to kind of like dive into. So, so important. We're going to start wrapping up here, but I want to jump back into fintech a bit. And, I want to talk about this like B2B world of fintech that we're living in right now, where I always kind of explain it as like fintech is becoming across all industries, this operating system that exists, but it's invisible to the end user. And a lot of folks don't realize that they might be using, they might be flying on Delta, but not on Delta Airlines, but not realizing that, the majority of their revenue comes from their credit card, or they might be building a website on Shopify, but not realizing the majority of Shopify's revenue comes from their POS system or their lending business. But now all of the biggest, smallest, mid-sized businesses that we're engaging with, the operating system they sit on top of is fintech. And it's invisible. We don't see it, but we feel it. And I'm curious, like, how are you thinking about that as an investable opportunity, but just generally like in your thesis around investing?
So the thesis that we articulated for this fund that's currently in market is invisible finance. That's literally what we called it. Yeah. And we talk about it as, we're in our third wave of financial services technology innovation. We're in wave 3, we believe, and that's invisible finance. So wave 1 is kind of like your bread and butter fintech. Typically what that meant was digitizing the interface. So taking it from like going into the branch and having a conversation or going and calling your insurance broker to being able to have that engagement in a digital platform. So like it was kind of fueled by mobile, think your neobanks, early insurtech apps, that kind of thing. So that's wave 1 is digitizing the interface, fintech. Wave 2 for us is embedded finance. So taking the financial services and putting it at the point of need. So having, point of sale financing, point of sale checkout, right? Kind of interactive, like here's where I need it. Here's where it's being presented to me. Obviously it's in a digital interface because we got that from phase 1. And the example that I always use is like, imagine there's like a business owner in the world of fintech. She could go into her banking app and do what she needed to do. She could go into her payments app and do what she needed to do. In the world of embedded finance, she just has an operating system for her restaurant. Within that operating system, she gets access to the financial services she needs. That's embedded finance. The phase that we're in now, we're calling invisible finance. And it's just what you described. It's your financial services running in the background. You as a business owner are actually just making decisions. So I nicknamed her in our deck Rosie Restaurateur, right? So, I gave you what she would do in phase 1 and phase 2. In phase 3, Rosie Restaurateur just makes decisions. She just changes her menu. She opens a new location. She, hires 3 new people for her team. And the financial services that she needs, they're adjusting in the background. They're shifting. She's being prompted with new things. They're automatically, designed to fit her needs, even as they change. That's the phase that we're in now. You don't even have to explicitly interact with your financial services all the time, which is why some people don't recognize their impact because they're running in the background. And I think that is when you're getting to like the kind of highest level of financial services innovation is when it's invisible, right? We don't think about our electricity, do we? Right? You just like walk into a room, you turn on the lights, you never think twice about the fact that the lights work. And I think that's where we are with financial services. So I really do think it's investable. It is our thesis for this fund is invisible finance. That's what we're investing against right now. Obviously, this is like, was put together and kind of marketed like 2 years ago, but still I think we're living in that world today. And so right now we spend a lot of time looking at the solutions that are building this like kind of clunkier back end infrastructure and remaking it, right? Particularly now with the technology that we have, we're investing pretty actively in solutions that are saying we're rebuilding this from the ground up. We invested in a business that's saying we're going to rebuild core banking from the ground up in an AI enabled way. We're going to rebuild, data orchestration and data lakes from the ground up in an AI enabled way. Like we're investing in businesses that are building that layer. And then we're also investing in businesses that are more at the coordination layer, right? They see all the things that are already happening. They see people are leaning more heavily into like, AI agents, et cetera. And they're like, how do we unify that? How do we coordinate across all these different pieces of the business? And so both of those we consider to be investable opportunities right now.
When I hear invisible fintech, I don't instantly go to direct to consumer. I go to like unsexy B2B, which again, like I'm the biggest believer in your thesis right now of this, like these unsexy models that are the picks and shovels of everything that we do. Where does consumer play in this? Is there still an invisible fintech play in the app layer of consumer, or is it purely living in the B2B unsexy infrastructure?
I think it's majority living in the B2B unsexy infrastructure. I'll say that when we characterized invisible finance, what does that look like? One piece of it is it deeply understands the user. One piece of it is that it deeply understands the context. And then the last piece of it is that it operates autonomously and efficiently. So I think the places where you see that sticking more are in the business case. But let's look at a consumer. Are we seeing solutions that deeply understand the user? Yeah, I think we are. We're actually seeing some that are getting better at understanding you across scenarios, not just how you act within like your banking app, not just the financial decisions that you make, but how do those financial decisions overlay with like where you are in your life personally and like maybe your career and whatever. So think about building a more cohesive picture of the consumer. I think we're starting to see solutions that do a better job of that. We're starting to see ones that pull in context at the same time and then take that and automate things and act on your behalf. I still believe that's invisible finance. I think it's really difficult to sell that. And that tends to be the barrier on the consumer side. Not that it doesn't exist, not that people aren't building it. I think the harder part is like the business model and the go-to-market. That's where we get stuck. But I do think it exists. I
agree.
People are building.
I agree. Yeah. I also feel like, if you're selling the invisible fintech, it has to be on like on act 2 of the business of a consumer business. Like you basically have to sell, I need to get the users so I can create the infrastructure layer of invisible fintech. For example, like a company like Chime could do some really incredible invisible fintech because they have 14 million users and they have all the data and they have all the actions to be able to take advantage of that world. But again, like the users take time, and that is the hard part to invest in right now, because we know that if you're just spending money on Facebook and Google, or I'm sorry, Meta and Google, then that's going to cost a ton of money for you to get there. For a lot of these like B2B invisible fintech businesses, a $2 or $3 million seed round could get you to $10 million in revenue, with the right team behind it. And that's very exciting for an early stage investor like us.
Yeah, absolutely. So and that's what we're finding too. It's not that it doesn't exist. It's not that people aren't building it. It's hard to back. I will say we're seeing some companies that are trying to find creative ways of like supercharging the data they get from a consumer from day one. It's really difficult sell, but when you can do it, that can be pretty compelling. It's like, how do you augment your onboarding process? How do you deliver some sort of day zero crazy value, something, even if it's a small snippet that's just really compelling to the consumer, that it kind of compels them to share a little bit more upfront. So we're seeing some people who are coming up with interesting hacks on that front, but that's what you have to do. Otherwise, you're right. You're waiting a really long time before you can layer on anything somewhat impressive.
Yeah, but I think it's a good point, right? Like 10,000 users, each user has 1,000 different like data points that we're pulling from versus 200,000 users, and like you have one or two, like the value is pretty equal. Probably a little bit more on the 10,000 population.
Yeah. And I will say in those scenarios, a lot of those founders are still having to think about B2B monetization. Right.
Yes,
so like to your point, like even with all that data, even with the potential of building something really compelling on the consumer side, the really pragmatic founders are still saying, okay, but in the short term, I have to have a way to monetize this that's like appealing to like a B2B audience, and then down the road maybe you can monetize a consumer. So it doesn't take away the fact that you still need another revenue stream. Yeah.
Totally. Yeah. No, we could go on and on about this one. I obsess about this all the way down to like how you price these things out as well. So, but invisible finance is something that, I think I'd love that that's a topic of this fund. It's something that we obsess over all the time. And, I also think, you kind of have to be in fintech to land on a thesis like that. That's typically not a fun one thesis unless you come from another business that, obsess about this in the first place. Because you got to start. You typically start on the app layer and you start getting deeper and deeper and deeper. The more tenure you are in the space. I want to round this out a bit. And what I typically do is I just end it with a couple speed round questions. So these are like super quick answers. Number one, what is right now your greatest AI hack for your own personal productivity?
This is so basic, but like getting my companies, I put companies into a Slack channel, I get them moved into Affinity, and I draft an email, like a first email to them. Like just that little flow. It's like not even that fancy, but it just saves me so much time. Because I don't know about you. Collecting companies all the time, right? You send yourself a link, you save something here, and then you just kind of forget about it. And so that's...
Yep. Yeah. Good. That's a great hack. What's your number one wellness hack?
I'm trying to sleep. Again, so simple, but like I don't sleep. And so my New Year's resolution was to sleep. And I've been working on it. And guys, they're right. Sleeping works.
And let me ask, does that mean you're going to bed at 12 midnight instead of 1? Or is that like 8 p.m. type thing? Like where are we falling here?
The goal is 10. I've gotten to like 11:15, 11:30.
Yeah.
I'm kind of hovering around 11:15, 11:30, trying to work my way to 10. I leave my phone in the living room. I leave my phone, my watch, anything digital in the living room. I have like a whole like nighttime routine. I have a journal for the nighttime in the morning. The thing I haven't quite cracked is the 8 hours consistently, but we're at like 7. So.
Okay, if you could not invest in any part of fintech, but you had to invest in another another industry, what industry would you be investing in right now?
Healthcare, specifically longevity.
Love. Yeah. I also, another conversation, but the intersection of fintech and healthcare is very exciting right now.
I agree.
Some really interesting thoughts and theses to play around with. If you could be the best athlete in any sport for the next decade, what sport do you choose?
Ooh. I feel like I'm kind of being a clout chaser, but I would say tennis because cutest outfits, elegant sport. Yeah, I think I'll say tennis. Yeah, that's a good question.
Like Wimbledon, like come on, Miss White, a Rolex on. Definitely a vibe. Okay, and then last question. Can't be a fintech company, but if you could be the CEO of any business outside of fintech, what company are you the CEO of?
Ooh, outside of fintech. Lovable. That's a sexy business right now. Yeah. I'm aligned with that. Yeah, Lovable's cool. Have you been vibe coding on Lovable? Yeah, I have. And I like the accessibility. That's, I think, what I like about Lovable. If you're somebody who, I'm trying to use Cursor now too, but like if you're somebody who is starting from scratch, approachable, accessible. I'm trying to make my family do a family hackathon during family vacation on Lovable. And I love that. Well, I mean, they haven't agreed to it yet, but the idea is strong. Yeah. But yeah, and I think that's because it's approachable. And like we can use something that no one's going to feel intimidated when they open it up, when they get started. Yeah. Yes. Fantastic. I have no more speed questions. Bukie, Anthemis, incredible insights. Thank you so much for joining. Always a pleasure. And I'll see you at FinTech Meetup. Yes, I'll see you soon. Bye, Joe. Awesome. Thanks, Bukie.
This season is supported by Silicon Valley Bank. For decades, Silicon Valley Bank has been a true partner to the innovation economy, helping both founders and funders grow. Silicon Valley Bank, a division of First Citizens Bank, member FDIC. Please note, this podcast is for informational purposes and not investment, financial, or legal advice. The views expressed are those of the speakers and do not necessarily reflect the position of Silicon Valley Bank.